thank you for joining. Maybe as it's such a small group of us, I'll ask you, do you know anything about graphite? Or very little?
A little bit.
A little bit, okay, that's no problem. Let me go through the housekeeping there quickly. So SRG is a TSXV listed company. We're about $100 million market cap. On a good day, on a bad day, it's slightly below, but it's very closely held. And we have about $14 million in cash, which is all we need today to basically get to the point where the company will be construction ready. And how we're going to get there is what I'll explain to you. We have a couple of large shareholders, the Mancha Fund, which you may know from Endeavour Mining, which is a FTSE 100 gold mining company. They're looking to diversify away into kind of battery metals, and we're one of their chosen vehicles that they support. And then we have Sama Resources, which is a company we spun out of. They're still a shareholder, as well as Chorus Bank and a few other high-quality institutional shareholders like Rothschild. When you want to ask more questions, I'm happy to go through it in more detail, but we only have 10 minutes, so I'll try to be succinct. But we believe that there is a very important role for graphite in this energy transition. And the reason we believe we're kind of overlooked is that people have been focused on the highest kind of cost, most immediate problems in front of them, which is nickel, cobalt, lithium. But that is on the cathode, on the positive side of the battery. Now, if you look at simple battery chemistry, you need a plus and a minus. And we're on the minus side, which is almost exclusively made out of graphite. And yes, there's a lot of debate in the industry if this energy mix will change, if we're going to go to solid state batteries, lithium metal, you hear all these things. But the only thing you really need to know is when you speak to the actual experts that are building these gigafactories, is for the next 10 to 15 years, the technology choice is made. And it will be traditional kind of battery chemistry. And therefore, on the negative side, it will almost exclusively be graphite. So we don't have to participate in this kind of very detailed kind of chemistry kind of debate. On our side of the story, it is really just graphite. And if the EV adoption rate is whatever it is, the demand for graphite will keep growing, just like it will grow for all the other metals. We have a very high quality team. We are actually probably more known for the mines that we built as a collective group. So Benoit Lassalle was the chairman and the founder of the company, built a company called Semafo, a big gold producer, which ultimately got sold to Endeavour. I spent my last 10 years working with Robert in Congo, building Ivanhoe Mines. And then you got the La Mancha group, which built Endeavour Mining into a FTSE 100 gold miner. So our collective experience in West Africa is real, and it's real especially when it comes to building mines. When I took on this job about 6 months ago, the company was already in existence, but it kind of became a bit dormant. So we put a new management team in place. We recapitalized this with the help of La Mancha, and we came up with a new strategic direction, which is focus on building the mine first, and then ultimately we'll go downstream. Talk about that in a minute. Our project is quite advanced stage. We have a feasibility study already completed. We have done pilot plans. We have offtake discussions ongoing, but 40 customers have seen samples, so we're quite far advanced in this whole kind of offtake discussion. Let's see if I can move this forward. I think I already touched on this, but when you have a difficult subject in front of you, you always try to kind of make it like simple. And so these are three kind of yes/no questions. And the first one is, will the battery chemistry change? And I already touched on this in my introduction. We believe that on the anode side, it is almost a dead certain answer, no. It will be graphite. And yes, there might be some silica involved, and yes, there might be some synthetic graphite versus natural graphite, but realistically, there is a large and growing market for graphite anodes, and that's not going to change. The second thing is a question that is often kind of put forward, and a lot of the supply today comes out of China when it comes to graphite. And when we speak to the car manufacturers, and they are not, for the record, necessarily our customers. Our customers are the battery manufacturers, but when we speak to the car makers, they're very clear and they're very politically correct about it. They say nothing bad about China. It's a huge market for them. They sell tons of Teslas, and Volkswagen sells lots of cars there. So they will never say anything bad about it. What they do say is that they'd like to diversify their supply chain away from one that goes exclusively through China. So every second molecule. And the only thing you need to know when you're talking about graphite today is that 87% of the world's graphite in one way, shape, or form goes through China. So in the procurement departments of these big car manufacturers, they're having a mild heart attack when they realize that it's going to take some time to replumb that supply chain and build it up outside of China. But that is the opportunity. I think graphite is probably the commodity that's most exposed to this particular situation. And then you have to look around and say, okay, how many graphite companies are present here today? Who's doing what? And we think we're at the early stages, just a little bit like lithium was 5, 6, 7 years ago. It had a couple of false starts. People didn't really see where it fitted in the overall kind of energy transition. And the same will be true for graphite. There's no scenario in our mind where, in 5 or 6 years, this will be exactly the same response as you've seen with graphite. And this is where you get the first mover advantage. If you can get into production first, you're established, you can feed into that kind of demand. So that's where SRG fits in. There is a big debate in our industry between two concepts. So the miners, like us, will produce natural flake graphite, which is like a little flake-sized crystal. But there is such a thing as artificial graphite, which is effectively a waste product from the oil industry. And there is probably room for both. Depending on who you talk to on which day of the week, the split could be anywhere between 50-50 between natural and synthetic, 60-40, 40-60. But you will not find anyone that says it's probably going to be 100% synthetic. So there is room for both, and as the market grows, I think there is more than enough room for a couple of players in this market. We have another kind of secondary benefit, which is quite important in today's market, that natural flake graphite has a very low carbon footprint compared to synthetic graphite. Synthetic graphite, as I mentioned, is a waste product from the oil industry, and natural flake graphite obviously occurs naturally. And if you mine it in a kind of sustainable mining doesn't really exist, but if you mine it in an intelligent way, and you have a low carbon footprint during your production, you use solar, it's at surface, it's not underground, you really can get to like a factor 5 between carbon footprint between natural and synthetic. And this is not of primary concern to the end user. The primary concern of the end user is security of supply. Can we get this stuff outside of China? The answer is yes, but you've got to develop the supply chain. Secondary is like obviously quality. It has to be of battery grade quality, very important in our industry. But the third is, if there is an opportunity to be greener, that is of real interest to the battery makers and the car makers. So when we took on this company in March of this year, we put a new management team in place and we recapitalized it with the help of Mancha. They've been a superb kind of shareholder and director on our board, nothing but supportive. And most important, when you go through these kind of due diligence processes with real large kind of investors, they're very thorough, and the market probably gives a lot of kind of credit to that. When somebody like that comes on board, they've done their homework, they know what they're talking about. So, the endorsement was worth something to us, but also, they are good for their money and they will follow through in all subsequent fundraisings. And today they're at 24-25%. And I think, they don't really want to own half the company, but they're happy to go up to, 29.9, 35%. That's probably kind of roughly their sweet spot. And you only have to look at the latest deal that they did with Horizonte Nickel this week, which is another company that they invested in. They just keep following their rights, every single financing. They're there, they put more money to work. So they're real company builders, and they have a strong network in Africa, especially in West Africa. So we're very, very proud that we have them on board, and they will be there for the construction financing, I can assure you. When you look at graphite, there's a lot to kind of learn, especially in a 10-minute session after lunch. But what I want to kind of touch on is that every junior mining company in the lithium, nickel, whatever manganese space, everyone wants to kind of become vertically integrated and produce a crystal, or in our industry, in graphite, it's called CSPG, which is an acronym, stands for coated, spherical, and purified graphite. It's kind of the holy grail what goes into the battery. And everyone looks at the margins and think, oh boy, that's great, because I can make, an 80% EBITDA margin doing this. But what the point that's overlooked there is that, like, we're small mining companies, you've got to build a mine and in parallel build a refinery. That's tricky. Typically, that means high capex, and you're layering execution risk, et cetera, on top of each other. So I would say when you look around in the mining industry, and anyone that says they're going to be vertically integrated from day one, good marketing spiel, but in reality, you're better off building the mine first, establishing yourself as a producer, and then become vertically integrated. And that's what we'll be doing. There's other players in our industry that want to get vertically integrated from day one. That's good. I want everyone to be successful, because only then, you get the rising tide and people start to pay more attention to graphite. But we're very much of the focus, built the mine, of the view that build the mine first, walk before you can run, and that's what we're doing. In the second phase, this will happen. This industry will be built outside of China. We believe the best way to do that is through partnerships. When you look at the discussions with our end users and where we are at the mining companies, everyone's like staring at each other and is like, how far downstream are you moving and how far upstream do I have to move? And it's uncomfortable for both, right? Like, nobody wants to be in the mining industry, and we don't really want to be in the chemicals business, but somewhere we got to meet. But the best way probably is to do this through partnerships, because trying to reinvent the wheel on our own, I think there's a lot of precedents for that to go wrong, and some have gone right. But anyway, so we're actively developing all these partnerships today on the financing side, on the industrial kind of side, and on the technology side. What's coming for the balance of this year, early into next year, is we have an updated feasibility study which should be ready by Q4 of this year. The financing is going to be kind of the next thing, the next cab of the rank, alongside the offtake discussions. So you can expect news on that in early 2023. And in parallel, we will present you the kind of, what does the integrated plan looks like. But I really want to stress to you that we're focused on building this mine and getting into production. And then the second step will be to kind of become vertically integrated and touch some of that, of these mega margins. But we make good margins in phase one, I can assure you. And so SRG is a young company. We've got a lot of news coming out. This is our very first kind of marketing trip that we've done. We've been quietly getting this back on the road. And so we encourage you to, buy a few shares for your favorite cousin. Thank you.